Good afternoon, everybody. I have to call you very welcome at a rather chaotic EIC summit for us at the very moment. You have seen next to me already Jose Martinez. He is the main star of this fantastic show that you're going to see the coming 40 minutes. The show is called How to Pitch in Front of an Investor and Be Ready for All the Questions that they might ask you. So without further ado, and we still have to organize a bit of screens here, so that's what my role is going to be. I'm going to give the pass the floor to Jose Martinez, who will entertain you, I'm really sure. Take it off, Jose.
Thank you very much, Jasper. So I'm gonna share my screen. Just a second. Yeah, here we are. Oops. So Laura, can you see my screen?
Yes, all good.
Okay, fantastic. So let's prove that we are in the auto world, and I hope you see some of the cars at my back. And let's start. This is about pitching to investors, and I'm gonna ask you to join. What the heck is not working this? Give me a second, it was working. It's not working. Give me a second, Laura. Sorry for that. It was working 1 second ago.
No worries. For all the participants who just joined, we will have a Q&A session at the end. So if you want, you can raise your question in the chat, or you can use the raised hand under the reaction at the control button on down there to raise your questions to Jose. Thank you.
Well, this was working, but now it's not working. So, well, let me do it. Yeah. No, I take it. So, sorry, it's working now. I hope you can see the screen. And
yes, all good.
Okay, thank you very much. This is the Slido, so you can use your camera to scan the code, and you will join the quiz that we are gonna make. So let's move. First, a disclaimer that there is no gender bias on this presentation, and this is the first thing, because raising capital is like flirting, and we are gonna talk today about flirting. So the first question: at which moment would you ask her or him to marry you? In the first date, in the second date, after 1 month, after meeting her or his parents, after first trip together, or never? So please, if you can vote, we will share the results and the conclusions of this. Oops. So 5 seconds more. Okay, I hope it works. Okay, fantastic. So after the first trip together is the biggest option. And what does it mean? It means that when you are partnering with an investor, this is a long trip, and probably you are not asking to marry you in the first date, and probably they will want to meet your parents and will see who they are, or they want their friends to meet you and know you better, and things like that. So it is important not to ask to marry in the first date. And sometimes when we are pitching and we meet an investor, from the very first moment, we are asking for the investment. And this is, in many cases, this is not good. Okay, so as they say in Italian, piano piano se va lontano. So it means step by step. And we have to go step by step, connecting and engaging with the investor with some breadcrumbs. And they will ask, and you will answer, not all in one push. So the first impact is in your business card, physical or digital, with the slogan under the logo. Okay, so what does it mean? Oh, it's interesting. It gives me a clue. And then they will ask you, what does your company do? And you have to do it. You have to prepare a mini pitch in 15 seconds, period. And you don't stay more, because if they are interested, they will ask you, and what does it mean? And why this and why not? And the second point is, if they have some interest, they will ask you about more content. And it's good that you prepare a 2-minute speech. And I will give you some clues afterwards to deliver your 2-minute speech. And in some cases, like here in the EIC Summit, you have to go to a pitching event, and then you have to deliver a pitch in 5 to 8 minutes, and you have a Q&A later. And at the end, the objective of all these stages is to get a one-to-one meeting, a longer one-to-one meeting, let's say 30, 60 minutes a pitch. And well, you start to know each other, and then you say, okay, do we see you again? Do I see you again? And in the meantime, the investor is going to do some research. They will tell you, no, I'm traveling. Why don't you have a coffee with my friend? And his or her friend is the analyst of the investor investment capital. And you have some meetings. And at the end, you start thinking about giving her or him the keys of your house. And that's the term sheet. There is an opportunity to, let's say, start living together. And if you finally give the investor the keys of your house, and you start living together, there are no secrets anymore. Or you have to work to hide them, because you will offer a data room, virtual data room in many cases today, and they will want to know a lot of things, a lot of details. So they are in your house, they have the keys. And you'll have several calls, several meetings, and even they will meet the founders or the executives of the company. And in some moment, they will meet with your existing investors. And it's like meeting your parents. And if after that you are still in love, then they will give you the money. So let me ask you the second question. What kind of relationship would you like to have? And you have some options. Something casual, just living together, a poly-love relationship, a marriage with separation of property, and even thinking on a divorce, or a marriage with community property. So let's merge our property and see them as ones. Okay, so please, you can vote. Okay, 10 seconds more. Good. So most of them, 44%, marriage with separation of property. Some of them poly-love, some of them community property. So something casual is a bank loan. So I don't want any commitment. I just need some money for some time, no commitments, that's a bank loan. Just living together could be a bridge investment. So I give you some money, not the whole money, but just to survive some months. A poly-love relationship could be a co-investment among some investors. So you don't have only one partner, you have more than one partner. A marriage with separation of property, it's typically the case of a VC. A VC is going to marry you, but they are going to ask you a planned divorce. So I will invest on you, but in 3 years, I want an exit. So I'm going to marry you, and just the first moment after the wedding, I'm looking for the divorce. So think about this kind of relationship. Okay, I'm marrying someone who wants to divorce me in the next instant after the wedding. And marriage with community property, it's a typical case of a corporate virtual capital. So it's someone that, okay, I will invest and I will acquire 25% of your shares. However, I want it all. I want your assets. I want your IP. I want everything. And that's community property. So you have to understand what kind of relationship you want with your investor. Okay, let's move. Let's move. Yeah. And depending on your business stage, you have plenty of options. You have business angels, you have crowdfunding, you have ICOs, you have corporate venturing, you have private equity. So it depends on the maturity of your business. And this is important because if you are in one stage, let's say a startup in the graph, then you shouldn't go to private equity to ask for money because you are wasting your time and you are wasting their time. So it is important to address and aim the right profile of investors. And is pitching well worth it? Well, you have to think that less than 1% of the companies that knock at the door of an investment firm are really funded. Something between 200 and 500 pitches per year. And they are investing in something like 1, 2, 3. So it's a low figure. And the better you pitch, the more possibilities to skip the filters. And we were talking about profiling investors. And it is very important to know who the other party is. So you are marrying someone and you have to know her or him and not in the other direction. They will know you very well, but you have to understand how they are. So this is an open question and you can write different words or short sentences. And the idea is which are the key topics that you should ask to an investor. They should be, let's say, you should research or search, sorry, in the profile of the investor. So for example, I give you an example, the ticket range. They invest less than 1 million, they invest between 5 and 10 or whatever. So I would ask you to fill those words. Okay, thank you. You are starting. Influence on strategy, portfolio, industry interest. Okay, so 10 seconds more. Experience, opening to networking, value sharing, past experience, long base. Yeah, very good questions. Let me show you. I'm going to close the quiz. So the first question should be if the fund is open or not, meaning if they have money or they have already spent all the previous funds. That's very, very important because, for example, in our case, we are raising a fund. I cannot invest tomorrow in your company. I will in 3 months or in 6 or whenever, but you have to manage the time. So this guy doesn't have the money today. If I need the money today, this is not my target profile. If I'm looking for money in 3 years and it's the same time that they are getting the funds, it is a good opportunity. So understanding if the fund is open or not, it's a very important question. The second one is about the industries. Do they invest in energy? If I'm investing in other industries, it's useless. The life cycle stage, where do they invest? Invest in a startup, in early stage, in Series A, in Series B, where? The ticket range. So do they typically invest less than 1 million? Are they able to invest my 2.5 million euros that I'm asking for? And the geographies. Not only because you are in, let's say, France, and they are investing in French companies, being in France or not, but because you want to let's say you want to develop, the US market, and they have a partner in the US. So they could be a good support for you in the development of your company. So geographies is very important too. And around the investment process, we were saying, first, define the ideal investor, profile, geography, portfolio, sector expertise, average investment, as we saw. Second, decide your visibility. So you can start with a blind profile, or you can start openly. So my company X is looking for money, and everybody knows, even your competitors. Or you can go directly, so with your own resources, the CEO is looking for the money, or you can hire or contract an M&A advisor, so someone else is looking the money for you or getting the first engagements instead of you. So you have to decide your visibility, very important in the market, because it has an impact. And it has an impact that could be positive or negative. If I'm your competitor, I can tell potential customers of both that no, they don't have money, they are looking for money because they don't have cash. So if you contract them, you will lose them, you will lose the contract or things like that. So visibility is very important. And the last two things before getting into this. Once you have your pitch, once you have your story, I recommend you to test it with one sparring. Someone, it could be a VC or something like that, someone that won't invest on you ever for different reasons. So I would recommend to test it. And the last one, before entering into the marriage process, your board should agree on some red lines. So give you a couple of examples. We won't accept less than 10 million for 25% of the company. So you know, or the people who's negotiating knows perfectly that if you have an offer of 9 millions, it's not acceptable. So you don't waste your time, you don't waste investors' time. Or another thing, give them more than 25%, because if they are let's say the current founders are diluted more, they are losing the majority of the company, they are losing the control. So there is a red line, 25% or 20 or 30, whatever. So it is important to define with the board the red lines of that business, let's say, of that deal. Okay. And again, very important question for you, especially if you are a founder, if you are a CEO, if you are a CTO of the company. Investors could think that you are not the right person to lead
Dear all, I think Jose, we just lost Jose. We're trying to reach him again, but he's unfortunately connected with the Wi-Fi from the IEC summit, and unfortunately it's not very Very good. So we hopeful we can get him. If you have, in the meantime, if you have any questions, you can use the chat to already ask it. And we hope that Jose Martinez will join us very soon. I see
Laura,
he's already connected. Yeah, perfect.
Sorry about that. This is the
Jose, can you
Laura,
hear us?
can you tell me? Yeah, I can.
Yeah.
And can you see my screen?
Yeah, perfect. You're back.
And did you see my explanation, or I lost? When did you lose me?
We just lost you 1 minute ago. It completely, we could not hear you anymore. But the PowerPoint was still on. It's just, we just lost your, you could not hear you.
But did you get me when I put the quiz on the screen or not? Hello?
No, no.
Okay, well, let me repeat this slide and apologize for the connectivity issues. The point is that the investor could tell you that I will give you my 10 million euros, but CEO, or I will bring my own CFO. If the investor thinks that you are not the right person to lead the next step, the next growth step of the company. And that was my question. So what would you do if the investor is linking the funds in your position as a CEO? And you could be one of the founders, this could be your baby. So it's for you. So you take the money and run, you step aside and support the new person, you fight with investors to revoke the decision, or you say, no, okay, if I'm not the CEO, I don't want your money. I don't want your 10 million euros. So please, if you can vote. Yes, so far, stepping aside is the majority answer. Okay, so while you are finishing the voting, there is not right or wrong answer here, but the key thing is you must be prepared for this because it likely happens. They think you are not, you have been the best possible person to arrive to this stage, but you are not the best person for the future to come. So I have a fantastic CEO that can hand over you and bring you to the next step, or whoever. Or for example, you don't have a CFO, you are doing that role and I'm bringing a CFO, and that could be quite controlling for you. Okay, so well, important to be ready. Some tips. Let me give you some tips to do all these pitches. So the first one, 15-second speech. And you have here, I'm not gonna spend time here, but you have some very easy ways, some guidelines to fill the blanks, and then you will get a fantastic 15-second speech. And you need to start, you have a very short conversation, who you are, and so on. Well, our technology helps patients to whatever. That's one thing. And this is another guideline speech, very useful. So my name is Jose Martinez, and I'm the CEO of Company X, an integrator specialized in the energy sector. We have patented revolutionary technology for the windmills, which helps utilities, blah, blah, blah. So if you do it and you fill the blanks, you will have a 2-minute speech. And it is very important you build, you can use the guidelines or you can do it yourself, but it is very important you build these pitches from scratch. And you are not trying to take your 60 slides pitch and then you select some sentences and you do it, let's say, top down instead of bottom up. Okay, and regarding the 5-minute speech, if you are pitching in an event like this, there are mainly 6 topics that you can cover. One is the problem in the market, the gap. So there is a challenge, there is an issue. The second is how you fix that issue or that gap. And it's important to mention if you have customers or beta testers or things like that. And then what is your unique selling proposition? What is the comparison with your competitors? Because there will be competitors for sure, direct or in the same budget, they are your competitors. Then the business model. And I don't want you to give me a long explanation. It's a quick and simple way to show is your business model. And I'll give you some ideas. Then the team, because investors, particularly in earlier stages, they are gonna trust in the team. So I give you, Jose, 10 million euros because I trust you. Of course, I trust in the project, I trust in the technology, but if you are not here or you are accompanied by your colleagues, I won't give you the money. And finally, what do you ask? I've seen many times in pitching events, companies that left the stage without asking. I'm asking you 2.5 million euros or whatever. And here you will have in the presentation one sample of these slides. So for example, very typical, the matrix, your SME has all greens in those 4 features and your competitors have some red crosses. So let's say the difficulty here is to find those 4 features where you are unique. Or the business model, pretty simple images. Or sometimes this is the Nespresso model or razor blade or Netflix or software as a service. So this key concept that gives a good idea to the investor. Or about the management. I don't want you to put in a slide the full CV of all of your team members. I want just the name, the role, if you are missing for someone that you are going to hire, sometimes the logos of the places more relevant where they were working before. And if you have an advisory board, this is the place to mention it because investors don't want, let's say investors prefer to understand, they want to know that you are not alone, that your strategy is debated with more people. An advisory board is the place where you are debating the strategy. And finally, the requirements. So, okay, in this example, I'm asking for 1.5 million euros on 2 capital calls, one the next year and one the other year, depending on some KPIs or results. And I'm going to use your money, dear investor, in these 4 big blocks on sales, on delivery, on the technology assessment, and in marketing. Good. And then you have the final objective, the 30 minutes presentation. And there are some blocks which are important. You will give more detail on technology. You will give more detail on business potential, and you will give more detail on your growth plan. So I have this technology, this is the market, and why, and this is what I'm going to do to grow up to 100 million euros. There is one important thing that you should think about, which is you have to empathize with your investor each and every time. And empathize means that you have to make a deep research on profile, meaning they will be in YouTube recorded. You can visit their website and see about the news. You can browse on LinkedIn some posts of the partners of the investment firm, so you can understand them a little bit better, very easily on your own online. And then you can look for or have a look on their current portfolio and their past portfolio, especially the current portfolio. So think about similarities. So you invested in company X in your portfolio, and there are these and these and these similarities with that company. So it makes a lot of sense for you. It will make a lot of sense. It would make a lot of sense for you to invest in a company like us. Or the potential synergy. So we have seen that company X in your portfolio could integrate our solution, or we could benefit each other from being together with the same investor. And two relevant questions. You should tell them, why would you choose them to be your partner instead of other investor, of course? Because I want to be in Texas and you have an office in Texas. Because you have people very specialized in my sector, whatever. They have to understand the opportunities they have. Because I offer you a 15 times return on investment. Because I offer you blah, blah, blah. So you need to emphasize with them and make the decision easier. And well, finally, we are arriving to the end. You never stop pitching. Don't forget that investors are flirting with more companies at the same time. So they are not, let's say, trying to get married with you only. They are flirting with more people at the same time. And till the last moment, you are still pitching. So do not relax. Don't get panic in the last minute. Don't make comments which are not appropriate at any moment during the process, and push hard for the deal till the signature is done and the money transfer, the money is in your account. Okay. So conclusions. Practice, practice, and practice your different pitches. You must build them from the shortest one, the slogan really, then the 15 seconds, then the 2 minutes, then the 5 minutes to the longest one, not the opposite. It works worse than in this way. And that's all. Thank you very much. I will be open to answer any question. Laura?
Yeah, all good. So if you have any questions to Jose, please raise your hands and ask it to him directly. Thank you, or use the chat.
Yes. So I saw that there were some questions in the chat. I'll try to. Can you confirm you will see? Yeah, I think you will receive the slides. That's not a problem. And if not, you had the email at the bottom, and you can. You can answer. Can you confirm? Yes. So most of the questions are about the recording. So question, do we let investors know that we are flirting with other investors as well? And when do we stop flirting with other investors? Okay, so I think it's good if you tell it appropriately that you are talking with other investors. If let's say if this potential investor doesn't understand or make a drama of this, that shouldn't be your partner. That shouldn't be your partner. They must understand it. They will understand it. They could make a little bit of role play. Whoa, this is a disaster. You are not trusting us, and so on. But I think it is good if you make it in an appropriate way. If you are really, let's say, challenging aggressively, I don't recommend that. But I do recommend to have more options, not one option, because it could happen that at the end of 6 months negotiating, they are going to put you something that will cross the red line. And then you will need the 10 million, you won't have cash flow, and you won't have any other option that, let's say, pass your red line. And that's a problem. If you have two options, you always can choose. And when do we stop flirting with other investors? I would say it depends. If you got married with a corporate venture capital, you shouldn't. If you got married with a venture capital who is thinking in the divorce from day one, you shouldn't stop flirting, because you have to think in the next step. How much time it takes for VC to make an investment? Okay, typically this is between 6 and 12 months from scratch. So I knock your door, 6 months, best case, typically. 4 minutes. Thank you very much. This is what in Las Vegas called the lift pitch. This is already done by all VCs and business angels around the world. Well, I think it's quite common with independence of the geography. I've been pitching and helping some companies to pitch in Palo Alto and in Europe, and it is very, very similar. Investors are very similar. The profile could be a little bit different, but not much. Could you propose a useful base of funds that are worth to be approached? Base of funds. I don't understand that. If it's the use of funds, it's a question from Marek. If it's the use of funds, well, you have to think about your plan. When are gonna spend my money? Imagine you say that, no, I'm gonna spend it, the 10 million euros in one day in Google advertisement. So, wow, probably it's too much. So you think, you must think about where are you gonna spend my money, not yours, my money. So you have to convince me. What about crowdfunding when you don't have one investor? Any tips? Well, crowdfunding is another kind of investment, and you have to pitch. You have to create like a video. You have to do a lot of things about pitching. So it is very important, and the video that many people will see, let's say it is another target. It is another way to approach it. The messages probably should be less technical, but you are going to pitch. So most of the things that we have talked about are valid. And I have 2 minutes. I'm not sure if I will be able to finish all the questions. What investors consider to be red flags? Okay, not investors, but imagine that I tell you that my shares have to be preferred shares, or that I want to have a special vote in the board. So if I don't approve an action, even I have minority stake, you can't go ahead. So are you gonna approve that? Because the price, I mean, the investment and the enterprise value are just the two first figures, but there are a lot of legal clauses where, let's say, you can have a discussion with the investor sometimes, and they have their red flags too. So if, for example, if the drag along clause is not included, I'm not going to invest. Well, so there is a fight there. And I think I have 30 seconds. So let's try to answer one more. Pre-revenue startup with a functional prototype with good user traction, but not revenues yet. Can a good financial plan, business plan convince investors instead of revenues? Yes. So this question was from Anna Paul. So can a good financial plan or business plan convince investors instead of revenues? Yes. But again, it depends on your stage. If you have revenues, you will be able to go to some kind of profile of investors. If you don't have and you are selling your idea, there is no problem. There are investors for you, but you have to pitch in another way. In dealroom.co, which is one of the biggest platforms for investors and SMEs, there are registered more than 20,000 VCs. So I'm pretty sure that among 20,000 VCs, there will be one for you. So you can get a partner for you. Okay, I think we are done. Thank you very much indeed. I hope you enjoyed. You had my details there. You can connect with me in LinkedIn. And if you have any other question, I will be very happy to answer later. So Laura.
Thank you very much. We're going to close this session now.
Thank you. Bye.